All right, let's get right into it. The world of GST compliance is about to go through a monumental shift. And I'm not talking about a small update here. We are looking at a complete overhaul. It's a set of changes so fundamental that it's going to force every single business to rethink its entire process for filing returns. So let's break down exactly what's coming on October 1st, 2025. To really put this into perspective, just listen to this quote. The most significant overhaul of GST compliance since the system's inception. When you hear language like that, you know this isn't just another circular. This is a ground-up rewrite of the rules we've all gotten used to. And I want to be crystal clear here. Being prepared for this isn't just a good idea, it's absolutely essential for survival. So, what is the core of this big change? Well, think of it as a complete flip in philosophy. We're moving away from what was essentially a trust-based, automated system to a new reality that demands manual verification and perfect synchronization. We are leaving behind that, let's be honest, pretty comfortable world of auto-populated returns, and we're stepping into an era where every single transaction has to be actively, manually scrutinized. The days of passive compliance, they are officially over. Okay, so let's get to the headliner, the one change that's going to impact every single business in the country. I am talking, of course, about the end of automatic input tax credit. The system that you've known, that you've relied on, it's about to be a thing of the past. And what's replacing it is going to require a whole new level of diligence from all of us. Yes, you heard that correctly. You know that moment when your eligible ITC just appears in your GSTR-3B? Well, say goodbye to it. It's gone. Vanished. From October 2025 onwards, you are in the driver's seat, which means you have to manually action every single credit, invoice by invoice. The responsibility for claiming your rightful ITC is now 100% on your shoulders. So where is this all going to happen? Welcome to the Invoice Management System, or IMS. Think of this as the new command center for your ITC. Every B2B invoice has to land here, and you have to personally clear it for takeoff. If you don't, it stays grounded. This isn't just a place to view your data anymore. It's where you'll be making critical, money-related decisions literally every single day. So here's the new workflow in a nutshell. An invoice lands in the IMS. Then you have to decide, do you accept it, reject it, or keep it pending? If you accept it, that invoice moves to your GSTR-2B, and you can claim the credit. If you reject it, it's out. If you keep it pending, well, you're in a holding pattern. The main takeaway here is that you, the taxpayer, are now the gatekeeper for your own ITC. Your action or your inaction will directly decide your tax credit for the month. And this is really where the rubber meets the road. Each choice you make inside the IMS has an immediate and, frankly, irreversible consequence for your GSTR-2B. You hit accept, the credit is yours to claim. You hit reject, it's excluded, gone. You leave it pending, and it's on hold for a tax period, not included. It's really that simple, and that's serious. The power is in your hands, but so is all of the risk. But wait, there's more. The government isn't just changing this one major rule. They're adding a whole host of other changes to reinforce this new system. Think of these as systemic reinforcements designed to lock everything down and make sure everyone is playing by the exact same rulebook. First up, let's talk about credit notes. The old way, where a supplier could just issue a credit note and basically call it a day, is over. The new system requires what's best described as a mandatory two-way handshake. Both the supplier and the recipient have to be in perfect sync for the transaction to be considered complete. So how does this two-way handshake actually work? Well, the supplier still initiates things by issuing the credit note. But, and this is the critical part, the recipient must go into their GSTR-3B and reverse the related ITC first. Only after the recipient has done that can the supplier finally reduce their own output tax liability. It's a simple but frankly brilliant sequence that forces both sets of books to tell the exact same story. And just when you thought things couldn't get any tighter, they do. Starting even earlier, from July 2025, your GSTR-3B is essentially going into lockdown. Key fields are going to be hard-locked and non-editable. That means no more last-minute adjustments or tweaks. What you see is what you file, so you better be absolutely certain it's right the first time. Let's get specific on this. Table 3, which is your outward supplies, will be auto-filled directly from your GSTR-1. You will not be able to modify that value in the GSTR-3B. So what if you spot a mistake? Well, you have to go back to the source. All corrections must be made using a GSTR-1A before you file. This entire change is designed to create an unbreakable, data-driven link between what you report in GSTR-1 and what you file in GSTR-3B. And now we need to talk about the ticking time bomb. This is a big one. The government is introducing a hard deadline that is going to have a lot of businesses scrambling to get their affairs in order. And let me tell you, this is not a gentle reminder, it is a final notice. When this clock runs out, there are no extensions and no second chances. 3. That's the number. 3 years, that is the new absolute hard limit for filing any GST return. After that 3-year period is up, the door to file that return doesn't just close, it slams shut, and it is locked forever. No appeals, no exceptions, no do-overs. Let me give you a very real, very urgent example. Think back to your GSTR-3B for September of 2022. Well, when October 2025 rolls around, the option to file that return will be permanently blocked by the GST portal. It will be gone, lost to the digital ether. This isn't some distant theoretical deadline. It's right around the corner. Let me just spell this out one more time because it's that important. If you miss this 3-year deadline, you're done. The right to file that return isn't just suspended, it is permanently extinguished. And all that unclaimed ITC that might have been sitting in that unfiled return, gone. Forever. This is not a drill. Okay, that was a lot of pretty serious news, but let's shift gears from the problems to the solutions. Let's talk about how you can prepare, how you can survive, and maybe even thrive in this new compliance world. I'm going to give you a clear checklist to get you ready for October 2025 so you can face these changes with confidence. Here is your immediate action plan. First, and I mean right now, you need to hunt down and file every single pending GST return that's approaching that 3-year mark. Second, get on the phone with your GST software provider and confirm they are ready for the new invoice management system. And third, you have to train your finance teams. Get them in a room, walk them through these new verification workflows until it becomes second nature. This is about building new muscle memory, not just learning new rules. But look, this isn't just a one-time prep job. You need to build new, ongoing habits. This means your team needs to be monitoring the IMS dashboard daily, not just at the end of the month. It means you need clear, established protocols for communicating with suppliers when there's an issue. And it absolutely means you need to look seriously at automation for reconciliation and alerts. Because in this new world, your business is going to depend on it. So here's the bottom line. GST compliance is no longer just an event on your monthly calendar. It's about to become part of your daily operational DNA. It's not about what you do once a month anymore. It's about what you do every single day. So the only real question left is, are you ready to make that shift? Because the clock is ticking and October 2025 is coming, whether we're ready for it or not.